Big day in the markets today, but could you really have seen it coming? And what will happen tomorrow? These are two completely different questions, because what has played out till today has been purely on the setup and positioning. Tomorrow you get to know the actual results. They could be better, they could be worse. The market could also see some type of profit booking post the event. Why not? And then again, if the numbers are way off the charts on the upside, then there's nothing to stop this from stretching some more. So all these options are open, but the important thing is, where were we on Thursday and Friday? What was the setup? I think I spoke about it, wrote a couple of notes, but it's not just Thursday. It actually goes back to the start of the month, and I'd in fact done a podcast or rather YouTube video with an influencer mentioning this setup which we were seeing on strike. So I'm going to show it again and explain the strategy. And then you get an idea why it's so important to be data driven and use tools like these in your everyday analysis. So let us just get down to it, and I'm going to go right to strike and open sentiment indicators, because this is what the real thing was. The setup was a combination of two things. One is, of course, the daily swing, which is our own very short term sentiment indicator of momentum across the FNO basket. And while we say FNO basket, it broadly tells me what the Nifty sentiment really is in the very, very short term. Because every time the momentum across stocks is falling, that means more than 90% of the stocks are in negative momentum. We end up with the swing reading down here at the second red line, and if it's somewhere in between, less than 20 also, we end up at these levels. Now you notice how each of these readings were extreme lows in the market. Right, so it's an immediate signal. And so what I mentioned in my strategy in that interview is that if you buy at a time when you get a reading which is this low, which is sub 20, and even better if it is sub 10, then you are in a situation. And this reading was almost intraday. It was at 10 at one point of time. On the day it bounced back on Friday, and in fact Thursday. Yeah, Friday, that's right. So Friday morning, in fact, it had gone to 10 or below 10, and then it came back from there, closing at 12 because the market became positive. So this is how it was. In each of these has resulted in an upward move in varying amounts. So this was one part. Now this only tells you, okay, this is the short-term sentiment relevant for a couple of days. Now what surprised me is that from this extreme, I wouldn't have expected it to come back here. But in the strategy, I had actually highlighted that from this low in May, how do you ride this all the way to the election results? Because the idea should be to ride the entire move. And the way was that you trail it with the swing lows, and then eventually once you're above the 20 DMA and you stay above that, do not sell till the 20 DMA is really broken. And what we ended up seeing, if I simply plot the bands on top of this chart, no, it can't be done over here. So let me just go to the Nifty chart itself. Then that is sort of what happened. So for those of you wondering what this platform is, this is web.strike.money. So you can simply go to web.strike.money and download this, or you can use it directly on your browser with a 7-day free trial. So that is what you need to do to be able to get access. So when you come down here, you see this yellow line is the 20-day moving average. We touched it, but we did not close below it. So it ended up holding, and then now we are up here. Now what is the other reason why we should have been up here? There's a very strong reason between this bottom and this bottom, apart from the swing itself, and we will get to that, and which is the positioning. Now there have been a lot of questions around the positioning that people are asking me, and I will answer those as well. So that there's clear clarity. Should you look at this data? Shouldn't you? Does it matter? Is it hedging? All these kind of questions. First, let's just look at the data. It has history. Okay, when you say it has history, it simply means that every time one particular category of traders is short, okay, then it's an indication, and especially if it is significantly short, it's indication of a market bottom, and a lasting one for several weeks, months together. I was being asked today morning on the Money Control interview, can they really cover all these shorts? It's going to open up 2%. But this was a much bigger move than 2%, 7, 8, 9% move, and over 2 months, and it took that much time for this entire short to go back to a long, to an extreme long, that is. So it's not something that happens in a day. That was one of my answers. But the other thing is does this short really matter? People are saying, oh, this is just an event short, so it doesn't matter, or something else. And also there's this thought that, oh, is it hedging? Because, FIs may have stock futures and they are hedging and they have a large position there. So there are some such discussions. So, we'll come back to this chart. What we'll do is first, let's look at the data. Where does this data really come from? So it really comes from the NSE website. If you go to the NSE website, you download participant-wise open interest, you end up getting a CSV file which looks something like this. There's a breakup here of positions across the derivative segment in 4 categories. So all the derivative positions every day are categorized into these four categories: client, DI, FI, Pro, and in long and short. So futures, index futures, long and short. Okay, stock futures, long short, option index, long short, stock option, long short, and so on across categories. And you can then try to come up with some conclusion. So remember, there are hundreds of FIs that are listed in India. It's not just that there is one FI. So somehow people start thinking कि भाई एक ही FI है, short है तो मतलब वही short है. They think of it as a group, like everybody is short. Now everybody may not be the case because it's a net number that we are looking at. We are looking at gross data here and we are netting it, which means that we are taking the difference between the long and short. So even here client, if I say clients are long, they're the longest in history. But for every long, there are many shorts also. 5 lakh long hai to 2 lakh short bhi hai. Right? So this is an important piece of information to have, that you have so many longs and shorts. So you have so many shorts and longs. And therefore, every trader or every operator is doing something of their own, right? Each FI is thinking, okay, I need to be long. Somebody else thinks, okay, I need to hedge. Somebody is taking a naked position. Something or the other is going on. Okay. And then what are we trying to do? When we take a net number and plot it, which means we take the difference between these two, okay, in the index futures, and we can do that for all these segments. What we are really trying to do is look at the sentiment. What do they overall feel? And then we put that on a chart because we want to see when was the last time they felt this negative. Because see, it's 1 FI, 2, 3, how many? So they are also a herd. If a large number of people start feeling bearish and they express it through their position, we want to take notice. That is the way to look at this. That is why we call it sentiment indicators over here. It says sentiment indicators, right? It doesn't say anything else. And the meaning of sentiment indicators is that you're trying to measure their feelings, right? Whether they are feeling bullish. So if they get extremely bullish, the market tops out. They feel extremely bearish, the market bottoms out. Now, many times at the opposite end of that stick of buying and selling are client, right? So we can also plot the client side. And you'll find that they often have the reverse opposite positioning, which is they are extremely long, close to market bottoms when FIs are short. So was that the case also today? Yes, in fact, the client long position was the second highest in history. This point that they reached on Friday is the second highest long position. Now remember, what is client? Client is not just retail investors. They are all the HNI, smart money operators, sab kuch hai. So this is the smart money trying to be bullish, and this is the FIs who for some reason are hedging or short. And if the position is reaching closer to the extreme based on historical range, then it means they've become as bullish and bearish as ever. And that happened just 2 days, or rather 1 day before the exit polls and 2 days before the final results in terms of number of trading days. So there was a case here. We looked at the short-term swing indicator telling us, yes, we are oversold. We have a positional data telling us that, we have gotten too bearish on this market for some reason, some unknown reason, because remember they were long over here. They were at the other extreme. And from this point to this point, in a broadly sideways market, even though it's been edging slowly higher, the sentiment turned on its head from 400 par to 300 bhi aayega ki nahi, right? This is what the sentiment has been. And that sentiment is what I think ended up getting expressed over here. And what the exit polls have done is they've sort of squeezed this sentiment. It has nothing to do with what will happen tomorrow. People are arguing on Twitter, 360 nahi aayega, 280 aayega, 320 aayega. Now that's a story for another day. Today, as far as this is concerned, this position got squeezed. Tomorrow, the actual results will then therefore determine what happens further from here. Even if the market falls and you still have this positioning down here, it simply means that at that point of time, you will still have an extreme position. If this position starts getting cut and you have positive news flow, then definitely it can continue for a period of time, because these things last for a long period. So this is the overall, setup and conclusion that, nothing really happens in a day, nothing ends in a day. It all takes time, and this data point we look at as a sentiment. We don't really think whether FI is hedging, is not hedging, it's because of this or because of that. What makes him do that is important. Why are you hedging? Because you're scared. So sentiment is nothing but fear and greed, and that is what we want to really measure. And if there's fear at scale, then it's important information for us as traders to determine what happens next. Okay. So now this of course gives you multiple pictures. It doesn't tell you what the actual results tomorrow will be. That of course we can't know. If there was some near-term volatility and the market did fall, the only thing is The second thing, so more on a longer term basis, the only thing that matters, and I've said this before, is that you get a stable government, right? Stable government and market will be happy on a 15-day basis, even if it falls on a 5-day basis. So this is the other thing to keep in mind as the numbers actually come out tomorrow. If they are weaker than expected and there's any sell-off, it will only be about stable government in the end. If you still get a government that is going to be running the show, and even better if you still got BJP crossing the line of command, which is that they have enough seats required for a majority standalone, it's super good. It doesn't matter, that you got, whether you got, 290 or 295 or it's 310 or 305. That really doesn't matter as long as it's there and you're going to be there for 5 years. That's what will eventually matter. But in the short term, because a lot of people are taking bets on these things, those guys will get happy, unhappy, scared, and reflect their emotions by selling off the market. And that is why we look at a broader measure of sentiment, which is the positioning, to figure out what is really going on. If the positioning tells us that no, despite the near-term panic, things are going to get better, then we'll actually take that side. So let's see. It's still Monday. Tonight's data will change from the extreme short positioning we saw on Friday. How much covering has happened today will also be an interesting data point. And of course, tomorrow we'll come to know the final numbers, and then we'll be able to anticipate even better what is going to happen from here. Now, as long as there's no huge variation from the numbers, I would actually, if you ask me what I would think, is I would actually think there is a case for some pullback or consolidation over here. If not big, small, something, because there's always profit booking post event, right? Buy in expectation, sell on news type of thing. And that should be kept in mind. Eventually, things can always improve if we have a stable government. But short-term markets can move based on, very short-term sentimental behavior and positioning. So that's all in this update. Really wanted to highlight. And if you're not yet a user, want to keep watching how this data unfolds, then just go to web.strike.money and get your 7-day free trial.